Everybody should be able to see and hear me. Hopefully, everybody's feeling well this morning. We're going to jump right into this thing. Got a couple things to unpack, a few tickers to discuss and speak about. So excited for this morning session. Just make sure that, all right, and just make sure all my dots are crossed and we should be good to go. Um, so we do have Netflix earnings after hours today. So ticker NFLX is going to report right here at the 4 p.m. bell, right at close. So do want to kind of break down kind of ahead of earnings. Before I do that, are a couple tickers still within the breakout this morning. Coinbase just made a new 52-week high. We also have NVIDIA did the same thing. Um, OKLO is breaking out a little bit. Also, Tesla is here at 323. So I'm going to break them down as well. They have a level right around 327, 328 that we are going to be monitoring pretty tightly. So that is kind of the bulk of really how we're going to get things started. Let me go ahead and share my screen with everybody so everybody can pretty much see what I'm looking at. First ticker that I want to start off with though today is I'm going to start off with actually AMD. So AM Dizzle is going to be the first name that I want to go with. So let me make sure my screen is sharing. And 32. There we go. All right. So my stringer screen is sharing now. So AMD, go ahead and pull this up. So with AMD, we're right now at about 159, $159.80. So with this close above, yesterday we closed above 157. I would like to see if AMD can get us all the way up to about 164. That'll be the next level that we will be looking for this name. So we want to see if we can actually get a break above that 164. That'd be pretty solid for us to kind of see any movement higher. That is what we'll need to break. So that 164 area, after 164, just to zoom out, kind of show you guys the couple of next levels. You also have 169. I know that ticker AMDL briefly tapped $11 a share for AMDL. So AMDL to me is at a point where I think people should definitely consider going ahead and locking in some profit if you hadn't already. So AMDL, whether you got it at $3, $4, $6, $7, it's at the point now where at any given time, we probably could see a pullback from AMD, albeit small. This would be, a good opportunity to go ahead and realize some of those gains. So AMD right here at about 164. That's the next level, and then 169. Next ticker I want to look at is going to be ticker AVGO, which is for Broadcom. Reason why I want to look at Broadcom for a second, because actually right now we're breaking here on Broadcom out of this bull flag that we were forming over the past couple of sessions. So we go back to really top of June, end of June, up here to the top of July. Most of July, we actually were just trading sideways here on AVGO. We actually broke out of this bull flag pattern. So to me, AVGO is on the way to probably about $300 a share. So ticker Broadcom 300 is looking a lot more likely sooner rather than later. So you will probably see something on Broadcom. I want to see if we get a pull back down to 280 first. Next ticker, they actually went ahead and reported this morning, and that is ticker Taiwan Semiconductor. So ticker TSM. So we had a position on TSM. I know a couple who may have kept it. I know we cut it around 236, 235, just depending on where he was at. So this morning we actually hit all the way a peak of about almost 250, came right here to about 249. So TSM a really great is in really great shape right now. Of course, the SMH ETF, large contributor of the SMH ETF is going to be both NVIDIA and TSM. So solid report for them. I don't think any of us expected any less. But TSM's found new territory. So these targets just kind of continue to get hit, right? These targets just continue to get hit. So we see up here, we're here at about 244. Um, Obviously, 250 would be really the psychological level next there. But a solid showing from that particular name at this time. Next ticker we'll get into is I want to talk about Netflix. So Netflix at the 4 p.m. bell today. So let me pull this up real quick before I get into anything else. Pull up this. Add something to share. Palantir just made a new 52-week high as well, 153. Shouts out to them. I'll pull up this with ticker Netflix. So with Netflix reporting earnings, some questions that I've received on the back end. So I just want to answer them now, particularly on Netflix, is what's up with potential splits, right? So splits, earnings wise, always brings about that question because sometimes companies can use this as a day to potentially announce a split. Right now, currently, we're at 257. What's going to be 1257? And so for me, I mean, this run was incredible. Let's tip our hat to it. And I think just taking outside of just Netflix alone, we've seen a lot of companies have actually been able to um, surge to the upside at a very fast pace, and Netflix fell into that category. So to me, what's next for Netflix? Um, a really great deal with WWE TKO over the past few months. That's really played out well since the beginning of January. So first 6, 7 months of the year, Netflix is added a lot of good subscribers counts. I think they made some really great and strategic business moves. So with NFLX, um, to me, football season is getting ready to approach. Live action sports more over the next couple of that we can expect over the next couple of years. We expect more deals, right? Whether it's fights, more pay-per-views, more holiday games, etc. So viewership is not really in question. Also, the product itself. Netflix went through a period of time where, to really fund their own projects, they were taking on a lot of debt. So I want to talk about a couple of things on the fundamental side that have changed and kind of shifted here for Netflix. A lot of the shows that we saw from 2015 to 2020, particularly, were very expensive to create. And, Netflix was dealing with a little bit of financial trouble. That was really the bulk. I want to go here to kind of talk about one, their cash to debt ratio, which has gotten better, still not to me where it should be, right? But they're in a business that, their profit margins is one thing that I want to show. They have about a 23% profit margin, so it's not bad. Uh, One question that I've also gotten is, do I think that this name is going to increase the subscription costs? And to me, the answer to that is yes. I do think this name has a good probability of increasing their subscription costs because they can. The value to me of Netflix has went up. So I think that's going to be one thing that they always do is always try to go ahead and raise that subscription cost. They also really cracked down, I think was another thing that helped them over the past couple of years. They cracked down on the password sharing as well as Netflix household. So like really in order to use the same Netflix account on a consistent basis, not when you're traveling, they got it still convenient there. If you're traveling, they understand. But in order to really use, you got to be on the same Wi-Fi network. So like they really, really, really cracked down on this for sure. So it's definitely some strategic business moves that have paid off for Ticker NFLX. So excited to see where they go from here. I think they're in a great position. Like I said, a lot of good stuff, has came about, here for NFLX. So we like this name a ton. And we think, right, uh, we think we're going to continue to do well. All right. So that's my thoughts on Netflix. As far as the earnings wise, I don't think that this is particularly, and I don't think this is a name that you should be playing earnings wise. It just wouldn't make sense. First off, the cost of the contracts. Two, like most names going into this earnings season, um, this stock has already made a significant move. Once again, not to say that it can't continue to move higher, but it to me, it just wouldn't be worth the risk. If we were having a conversation maybe last quarter, uh, maybe the conversation would be a little bit different. But Netflix has already ran, intensely to this upside. So those are specific. Those are my specific thoughts when it pertains to this company and this ticker. And yeah, we expect more, over a period of time from them. Split wise, if they were the last thing I'll say, if they were to do a split, I'll probably say they'll do a 10-1. Just the question is if they want to do that split. Do they want to 10x their amount of shares outstanding? That's ultimately the question, is if they want to. The answer to that question is, we'll get it today at 4 p.m. And as well, if they don't do it this time, there's still a chance maybe next go around they could, but I don't think there's a lot of motivation to go ahead and do it. That's just my thoughts, though. Um, so scrolling through, I spent some time last night sitting back, kind of just reanalyzing a couple of things. And, this is one going in, especially going into earnings season. I want to pull up the QQQ and as well as SPY for a second here. Right. So we're back at it. We're back at an all-time high. The QQQ is back here at an all-time high. S&P 500, it's blown past an all-time high. So Netflix, contributed in some regard, but mainly it was names like, you could take a look across the board. There was a ton of names that really just had a great run, right? Meta Platforms to, Apple didn't contribute as much as maybe we probably would have thought, but Meta Platforms sure did. NVIDIA, Microsoft, right? Microsoft is a $500 company now. So those names in itself, AVGO, Broadcom's holding allocation within the QQQ has climbed, as its performance has gotten better. Also Palantir. Palantir, there was once upon a time where Palantir was nowhere near the top 10, right? And now we see this with Palantir up here at its peak point. So the part about chasing things at all-time highs, right? To me, this is not the time to try to FOMO into positions. This is not the time to chase something that maybe you missed the first go round, right? Um, there's been a lot of things that have ran, significantly to the upside at a fast pace. And I think, when that happens, everyone looks for, I guess, the main question that I'm getting right now. It's like, what's the next big play, right? And realistically, you can't really get any considerable move unless, right? Keyword unless at this point we would have to have a pullback. Like to me, there's no breakaway, right? Like a lot of the names that have already ran, they've ran, right? And some of the names that have still been running, even they have slowed down, and as well the volume slows down. So one thing that I continue to kind of remind people is that when a market gets back to an all-time high, you don't have the same volume that you would when the market is off of a all-time high. Like there's still certain tickers that might be trading with a decent amount of volume, but for the most part, majority of the market is low on volume. A lot of it is because who's really considering most tickers to be at a discount, unless you're looking at maybe the healthcare space or some sectors that maybe just didn't contribute and got beat up a little bit. And even in the healthcare space, there's far and few between, per se discounts, right? United Health itself is probably the one that's the one that took the most hit, but that was because of their own wrongdoing, right? So UNH itself, fell because of some situations that the company was dealing with. In a nutshell, I won't unpack that all today, but because we discussed that numerous times before. So, when I look across the board, I started looking, I said, well, The QQQ is at an all-time high. One of my favorite ETFs, the ARKK ETF, which we've only talked about probably at least for the past 3 years on every watch list, right? I mean, the ARK ETF, and as I'm talking about it, Roblox just made a new 52-week high. One of our breakout players this year, RBLX, I mean, is at $121. I mean, at the low of March, this stock was like $53, $54, right? So the stock has more than doubled since then. So I'm looking at the ARK and I'm like, man, well, shoot, we're almost at this $78 target, right? So the ARK is made its move, um, itself without Tesla, right? Funny enough, right? The ARK made all of this move and really Tesla didn't really contribute much. So it's not going to be too many times you can see an ETF make a move like this and its number one contributor, really was lackluster. But that just goes to show you the power of names like Palantir, Circle Internet Group, which is new to the ETF. When you take a look at Roblox, just the incredible run that name has been on. Uh, so I started, like I said, I started looking across the board, and I say, well, really, there's nothing that really excites me at this point, right? I mean, majority of anything that I could look at, majority of it is either one already made the move or two, it's sitting in a period of consolidation right now, so it's not really ready to go, right? And then we put the timeline on it, and we say, okay, well, what's some of the major things coming up? We understand earnings, right? We also do have a Federal Reserve interest rate decision that's getting ready to happen. Of course. Also, in the midst of that Federal Reserve interest rate decision, right? Just to think about this, you also have in a situation right now where Jerome Powell is being talked about being relieved of his duties. Other banks and countries around the world are, sitting with their popcorn, stuffing their faces saying, hmm, how is this thing going to play out? Because we've only heard for like the past 3 months that Jerome Powell is too late and all of this stuff. You keep hearing all this rhetoric over and over again. It's almost giving you a headache, right? Because every time you're cutting on the news, it's like, okay, you might be living the same day over and over again. Because Trump is really just saying the same stuff, right? He's sending his letters, he's doing his tariff duties, right? And then he follows up as soon as he finishes with that, too late power. Well, 1 second he says he wants to fire him. Next second he says, well, I don't want to do it. I'm not sure. So it's so much back and forth, but it's also gotten to the point where now, once again, you even see the talk of tariffs. If we compare the talk of tariffs last time to this time, notice that yes, the market has had a few points where we sold off a little bit, but it hasn't been anything sustainable because people can't really take what he's saying really seriously, right? Because it's been so much, okay, I'm gonna slap tariffs on these countries, but then he backtracks and says, hey, right, um, just what it is, and he just backtracks and then he switches up and says, hey, we're not going to do this. We're going to put last time he did a 90-day pause, now he's saying August 1st is the big day, August 1st, right? So everyone get ready for Friday, August 1st, which will come up in a couple of weeks, right? So he says Friday, August 1st, and then August 1st will come, or we'll get to that week right before, a few days before, and then he'll push it back again. Then the market rallies. So how much, I guess the main question that we have is, right, how much does the market take into account when he does push this date back again, right? Because I think people really understand that tariffs is really just being used in trade negotiations to really get whatever he feels as if is just and wants, right? So I think all in all, that's really where we sit at. So there's not really many breakaway trades because for the most part, majority of them already played out. So one or two things needs to happen. A nice flush in the market to kind of reset, rebalance some things. When I say a nice flush, right? You got August and September right around the corner. And there's a couple things that I want to share with you guys real quick. I have this created this from the other day. Let me, on this. There we go. But this is going to really focus on um, the market performance in August and as well September. So typically September and sometimes August can be, months where we don't see usually maybe the best performance. Um, but we can honestly use September as a great buying opportunity. So it's kind of like getting us prepared for that, right? Um, I see one thing where people have kind of asked me, "Hey, what are we particularly expecting?" So just from a historical context perspective, the summer can a lot of times be pretty nice, but it um, doesn't mean that it's going to stay that way, right? Um, there is a lot of calls, right, for you if you've been paying attention to some of the financial media. There's been a lot of calls for the SPY to go to 690 and 680, and also people looking as well for us to see potentially the 700 by year's end. So anytime I see a lot of those bold financial calls where people are making large statements and saying, "Oh my," just the way I told you guys when we dropped. If you guys remember, when we came down here in April and March, early April, March, February, just think back and remember how many analysts, right, were downgrading, right? They were downgrading their price targets. And they were saying, "Yo, our S&P price target, we're slashing it," whether it was Goldman Sachs or JP Morgan. Remember all the banks that were raising, right, the odds of a recession during the time when the market is down. So to me, when I start to see a little bit too much optimism and what I call smoke, so how are you gonna say you was expecting at first the S&P 500 wasn't gonna have any growth this year? Then the market comes back and now you calling for 700. Once again, I think we all agree 700 will come one day, but it's very convenient when you get back to the top of the market and now everyone's back super bullish. That's to me where you want to be a bit careful, right? Is where everyone, you know, everyone starts to, say, "We're going to keep hitting these new highs, keep hitting these new highs." That's where I kind of turn the side eye and say, "All right, I got too many financial institutions that are talking about markets at all-time highs and are saying we're just going to easily keep making new highs." So once again, I think the names that we have are, very, 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 very strong. Um, names like Nvidia to me can run all the way up to 180, 185. I think we still have more gas in the tank left there. The major question is that a lot of people have been asking is, when do we start to see Nvidia start to contribute? When do we start to see Apple start to help Nvidia and contribute? So that's the main question of the hour. And we understand that unless Apple is getting above, or is it at today? It's hanging around 209, 210 still, right? So when you're looking at this level, we have to see Apple get above 215. So unless Apple's getting above 215, we understand it's not really going anywhere. So once that happens, we already have our alerts and all that good stuff. Microsoft is here at 510. So Microsoft has done their part, right? Microsoft has done their part and lifting us up here to, all the way here to this upside. So the QQQ is very grateful for Microsoft, all right? Very, very grateful for their performance and how they've been able to actually go ahead and move. So Microsoft here at 510. So your top three names there. Amazon is here at 223. Amazon is still looking to try to get above. We still have to get Amazon above 230. So still a road ahead for Amazon where they have to break through. Most of the names now that are, once again, most of the names that have contributed, that are contributing, excuse me, right now, they don't sit high asset allocation wise. So none of, like, Robinhood doesn't sit high in an ETF, right? Roblox, yes, does not sit high. They sit high in the ARK maybe, but they do not sit high on the overall markets. They are not a top 10 player, right? Palantir has contributed a lot, but Palantir, majority of their contributions have came when they've been on the outside looking to try to get into the top 10. So do we think Palantir can, heat up more? For sure. AMD, we appreciate them. They're here at 160. AMD has doubled, right? So let's talk AMD for a little bit. AMD has doubled, right? And if you guys remember, I mean, AMD was one of our crystal clear cut easy buys, right? We called for one, we talked about AMD all the way down and talked about it all the way back up. So, it's here at $160. When it dropped from last year in October, it dropped from 174 all the way to hitting a low of about $73, $74 during the intraday session there in April. We're back up here 100% in 3 months. 100% in 3 months here from AMD, right? AMDL at its lowest point got to about $3, a little bit less than $3 and change, right? So AMD, incredible performance, but you now put yourself in a position, and this is what will be asked, and this will be what people will think, investors will think about when listening to these reports is, okay, well, you've gotten back to this, you've gotten to this point, but are your earnings increasing rapidly enough? You see, it's hard if the stock price is just going up on a consistent basis, right? But the earnings don't match. That's where companies get into trouble. Is because momentum can carry you up to a peak point. Momentum can carry you to 52-week highs or even new all-time highs, depending on what ticker we're talking about. The question is, once earnings start to come out, will your earnings actually be in a rapid growth to be able to match this move, right? So the stock price goes up 100%. And I'm not saying that the earnings have to go up 100% as well, but you can't go up 100% and then have a decline in earnings. That's not how this thing works. So while things have been running and people are jovial, markets are back to an all-time high, people are seeing their portfolios go up, the main thing that I want to say here is remember that there was a time where I would say that there was a ton of I wishes. And I'm going to speak to a lot of people here. Remember in February and March where you were saying, man, I wish I took profit in November, December. One thing that I always speak about is experience. So if we're at an all-time high, once again, this isn't to say we pull back 20, 25% again. But if you are in positions that you have, significantly made a bag on, right? To where you see an incredible amount of growth in your account. Don't you think it would be foolish to leave all of that on the table and not to take something off the board? I'm not saying you sell everything, but there was a lot of conversations that we had. And not all stocks have hit new all-time highs. Some have, some haven't. Some are still trading sideways, right? For example, if we're looking at Apple, which majority of us, right, we've looked at Apple as a benchmark. There's also been a change in the guard. Apple is no longer number one. What do I mean by that? It's funny enough we're having this conversation, but we had it about 4 to 5 months ago, if people remember. But that this day was going to come faster than what you could think. And there will be a time that no longer Apple would be as dominant. And here we are. Today isn't necessarily the first day, but we're living in the first moments of the point where NVIDIA honestly has taken over, right? NVIDIA is sitting at top, right? NVIDIA is sitting at top of the market now, right? Now, NVIDIA is not on the Dow Jones Industrial Average, but that can easily get changed very quickly. Someone can get removed from that DIA who's not performing well, and NVIDIA has the share price qualification to get in there. Now, Will they necessarily be a high asset? No, because their stock price is, still less than $200. Microsoft is the number two stock in the NASDAQ, but it also is the number two stock in the DIA, because in the DIA, the Dow Jones Industrial Average, your ranking is directly affected by your stock price. So the higher the stock price, the higher the asset allocation, which is why a name like United Health, which used to be number one, is now hanging there potentially, right there on the outside looking in, depending on some other performances from other equities, right? But UNH is out of that top 10. Excuse me, not out of the top 10, it's out of the top five. It's still within the top 10. So, we're looking here, and even Amazon has lost a little bit as well. There was once a time where Apple, which sits at 7.35, Apple was sitting in between around 11 to 12%. So you've seen Apple decrease 5% asset allocation wise here within this ETF. They decreased 5%. So that is that's nothing to sneeze at, right? And that in large part is due to the performance of what? NVIDIA, right? Microsoft has even lost, even with Microsoft's performance getting to 500, Microsoft has lost just a little bit because Microsoft used to tween between 10 and 11% as well. So they're here at about 8.85. Amazon, which used to be right around 8 to 9%. So roughly what I've been telling you is that three companies in the QQQ, which was Apple, Microsoft, and Amazon, used to make up roughly around 30 to 33% of the ETF. If you add these numbers together, 8, 7, which is 15, add 5, you're looking at roughly about 21% when I take the other parts, 21% makeup. So that means that the three-headed monster in Microsoft, Apple, and Amazon have had their holding allocation decrease from 33% all the way to about 21%. Now, who were the two names that took it from them? Look, none other than NVIDIA. And also, we'd be remiss if we didn't show a little bit of respect and love to ticker Broadcom, AVGO, which 5 years ago, 6 years ago, AVGO was in the position that Palantir was in, where Palantir right now is in the teens, which is between the 11 and 15 percentile of the QQQ asset allocation holdings. Now, also on this list, which funny enough, this just goes to show you the performance of some of these other names, Meta Platforms, which is even lost as well. You might be saying, well, how the hell did Meta lose asset allocation and they've been going up as much? Just goes back to the dominance of NVIDIA and also Broadcom. That Meta is still within the same spot they were 5 years ago. They're still stuck here at 5 and 6, and doesn't look like they're going to be getting back 5 because Broadcom is not going to give it up easy, right? And you also got Netflix. That just is a testament to Netflix performance has been neck and neck with Meta. If you're looking at a percentage performance, Meta, neck and neck. Meta had an incredible recovery, but also don't forget, Netflix went down to $160 and now went to damn near $1,400, right? Where Meta, we know they went to $90. Everyone said Meta was dead, and Meta's had an incredible recovery, blew past the 383 all-time high before, and literally has almost doubled that all-time high. So when you're looking here at Meta Platforms, incredible run. Now, the one ticker, there's going to be two tickers that have been underperforming, but yet they still remain in the top 10. And that is Tesla and also Alphabet, right? We would say that Tesla has been underperforming a bit more. Alphabet, which is still crazy. It's funny enough that Alphabet doesn't have more asset allocation, but even Costco, right? And Costco was kind of like as well with Broadcom. There was one point where Costco outweighed Broadcom in its ETF, but that quickly changed. So you look here at ticker Costco, great performance as well. Done an incredible job. But Tesla's been lackluster, but yet they still hold on to this 2.66%. Now we hit view all, and you look, Palantir Technologies is not too far away. They've distanced themselves from Cisco. Shout out to Cisco Systems, an old dog here, right? But Palantir is not too far away from Alphabet at all, and not too far away from Tesla. So with the continued success that we can see from, Palantir, there's no doubt in my mind that Palantir can go ahead and lap both of these two, because both of these two can go ahead and get lapped. So this is what I talk about when I talk about doing deep dive research. You see how I'm able to regurgitate this stuff? One, I lived through it, so it's easy to remember things that you lived through, but you also got to be paying attention to this holding allocation. So pay attention to the money in the flow. They're telling you that the number one, right? It's not just from a market cap perspective, but also from the holding allocation. Who would have thought that there's a distance of almost 2.5% from NVIDIA to Apple, holding allocation wise? Now there's a distance, literally, NVIDIA's weight is almost double Amazon. Pretty crazy, because at one point, Amazon's weight was 8 times what NVIDIA's weight was here. So this is just a recipe to show you how the tables can turn and your performance matters, right? Apple and Amazon and Alphabet, they all did splits, right? You've noticed Microsoft has not done a split. So I want to explain the piece of this part too, right? Like Apple and Amazon are, they're OGs now, right? Like Apple's paid their dues and they've done amazing things, but like I've said before, Apple doesn't, I won't say they don't, but like, what's going to be the thing that takes Apple from this $3 trillion company to maybe six? Because we can make arguments to how Nvidia can go and become 6 trillion. We're not saying it happens tomorrow, but we have a case on how it can do it. Now, of these top three names, in this order, Nvidia has the most shares outstanding. Apple has it right after. And this is what we talk about when you're doing your research, right? You should know these things. Nvidia has about 24.2 billion, right? Apple has right around 14.92 billion. And Microsoft is somewhere in between 7 to 8 billion. I don't have it all right in front of me right now. But those are the rough estimates. If we were to pull it up on Yahoo Finance, you would find it that those estimates to what I just gave you are somewhere within that ballpark. I'm sure that Nvidia is probably dead on and Apple's probably dead on. Microsoft is somewhere within that middle. The piece that I want to say is that the outstanding shares, what's the easiest company to move out of these three? It's simple. The easiest company to move is the one with the least amount of supply, and that's Microsoft. Now, what's the company that probably has the best amount of growth, right? The most amount of growth out of these three? It would be Nvidia, but not too far behind is still Microsoft. Microsoft still has made some really great strategic investments and partnerships that really Apple just hasn't. Apple wasted their time with a car. They tried to do try to come up with a different product, even though their main product is still a good product, but people understand they're buying the same phone, right? The same exact phone over and over again. So no one's in a rush to get a new phone every year like they used to be, right? So your product's a little stale. You need something else. What's your big major revenue driver, right? You have other auxiliary services. You have these AirPods. You have your iPads, your MacBooks. You have these great products, right? Which are really great products. And hell, AirPods could go and separate from Apple today and go and list on the market and be valued at about 30 to 40 billion dollars. So that's how successful AirPods is itself. If they wanted to separate, Apple broke that up and AirPods went and enlisted and IPO'd, they'd be somewhere around 30 to 40 billion dollars valuation from a company. So they'd be worth a lot more than some of the companies that people talk about, right, on a day-by-day basis. So to me, this is your bread and butter. This is what you call a deep dive. So what I just explained to you is why the market isn't going anywhere unless NVIDIA continues to keep powering and Microsoft as well too. Now, the main question is, do we get to a point where we are now going to see maybe Broadcom overtake Apple? And that'll be where I'll say that's turnabout fair play. Now, it's funny because Broadcom for years, has worked with Apple hand in hand. So it's almost like the student passing the master, right? The student passing the master. If that happens, right, which is something that can possibly happen, because once again, the design of this ETF is to keep the top companies, right, consistently at the top. You can't have your laggers sitting at the top of the QQQ, right? The same way that by design, this is the main reason why if we look at the DIA ETF, you don't see Boeing's behind nowhere near the top 10. Why? Because their performance has been abysmal. Could you imagine if Boeing was still near the top 10? The DIA would probably be trading somewhere around 33,000 points right now. They'd be 10,000 points less. But since the DIA goes based upon price and performance, right? The price, your price performance, you take a look, United Health is right here where? Right here at number 8. So they performance dropped. So guess what? They asset allocation had to drop. Simple. Goldman Sachs, Microsoft performance on a high scale. You know, Caterpillar just got back into the $400 range. Home Depot's not too far behind them. Visa's right there. Sherman-Williams, our good friend AXP, Mickey D's, McDonald's, MCD. And that's why MCD is worth a little bit more than United Health here because of the stock price. Now, if United Health goes back to being worth 350, 400, they're going to lap, right? They're going to lap American Express and McDonald's, right? But that's once again based upon their performance. Now, also as well, United Health better smarten up because soon they could be looking at outside the top 10 very easily because JP Morgan and AMGN are right on their heels, right? Salesforce is here. Salesforce, we know, needs to get back above 300 to even be in that conversation. But then you take a look, you see Amazon, you see Apple, NVIDIA, right? You see Apple, NVIDIA right here, right? You see 3M, Johnson & Johnson, Procter & Gamble, Chevron, Walt Disney, Walmart, and so forth, right? So, like I said, just an incredible feat that we've been able to see, so fast. Now, let's go to Earnings Whisper. We also have Tesla. We got TSMC, Taiwan Semiconductor, so we got them this morning. Let's talk about Tesla and as well Meta. So I want to talk about Tesla and Meta. So ticker TSLA. If you're looking on Tesla, since pretty much May, we're in the same spot. So like I continue to say with Tesla, unless we break above 360, I don't really see it going much further, but I also don't see, if you notice, even during the times where Tesla's been selling off, it hasn't really been able to break down. So there's not really any clear directional setup. We're just consolidating here. And so there's not really a break higher nor a break lower right now. Like I said, 360. So anytime I'm speaking about a key level and major level, you should be putting that alert on your Yahoo Finance. I think a lot of times there's not alerts set, and some people are just waiting on somebody to tell them what to do. But it's like I'm already kind of telling you exactly what to do before certain things even get to certain places. I'm already giving you a preview of what you should really do. So what do I mean by that? If I'm saying, 360 is that level that if Tesla breaks, that's where you're going to see. Now, the reason I took the lines off is because realistically, sometimes you don't even need those sometimes. You could tell by previous price action. Let me explain. So if you go back here to February 19th, if you pay attention, Tesla ain't broken this 360, 370 in pretty much a half a year now, right? So if Tesla is able to break finally above, it is going to have enough momentum to push this thing back up here to $400 a share. So it comes down to the when and if, right? Now, if Tesla comes and breaks through 290, breaks this 274, you could imagine if Tesla was able to break this 274, it would bring its butt right back down here to 220 and 230 because of momentum, downside momentum, or upside momentum above 360, 370 is going to carry it back to 400. Right now, Tesla has no momentum either way. So earnings-wise, what can we expect? I mean, this guy's running his mouth. He's not doing really too much. His sales are not doing well. There's no way your sales can do well when you're alienating your fan base worldwide. People are dumping your Teslas. People are saying, man, I ain't buying that because you kind of, you went public with too much of your political views. And so that alienated you from a demographic of people that supported and believed in your mission and your vision. So he has some things he has to repair, just unfortunately. So to me, with Tesla, I mean, the earnings is going to be what it's going to be. I think we'll have the earnings report and we'll still be looking at the stock within the same levels. I don't expect a $40 pop nor a $40 drop. So I think people are in, when it comes to Elon stock, people are in wait to see mode. How do I analyze that? What do I mean by wait to see? I pay attention to activity. You should always be taking down every single month the average volume that you're seeing. So with Tesla, we've went from, trading around 190, 180s. At one point, maybe we hit about 200 million shares a day. We're trading basically half of that. So that what that tells me is half of the people said, you know what? We're going to leave this thing alone for now. We'll come back when this guy gets serious. And that's essentially what you're saying. People say, you know what? We're going to leave this bad boy alone. We're done with him for now. Next ticker, Meta Platforms. Right? We're hearing about 701. It's funny because we were speaking about Meta. There's not too many stocks that can go from $80, right, all the way to $700 and be considered a company that is still fairly valued, right? You got a 27 P to E ratio. Just to let you know what the P to E ratio was when Meta was $90, it was about 7.7, right? So Meta was significantly undervalued at that price. So valuations are important, super important. We got a lot of overvalued businesses on the market that have ran intensely, and that happens. Overvalued businesses can run this thing up to the upside consistently. So let's talk about Meta ahead of earnings, right? Let's go to this analysis tab and take a look at, what's some of the projections here. So Meta right now, expected year-over-year growth sales-wise of about 14%. Last year, they did $5.16 EPS. The average estimate is about $5.84, right? For this current year, their average estimate to do about almost $26 a share. They did 23.86. So Meta's in a good position. Really solid position. We expect continued growth. This name is, funny enough, still fair. So to me, when it comes to, I wouldn't say to trade this earnings, but let's take a look at the chart, because I did get a question a couple of days ago about Meta. And hey, one of the questions that I got was, okay, what would be a good price level? If I was interested, what would be a good price level to pick up Meta? I would say between 560 to 580. Like that would be the perfect price, even around 600. Once again, if we don't break here, I want to show this because perfect, right? If we don't break here, what ends up happening, and oops, I already have it. Didn't mean to do that. What ends up happening is we form a weekly double top. The first top would be February 18th. The second top would be here. So if we don't break over 740, it's very likely that we could pull back a bit, right? Meta could see a little bit of a pullback. Now, Google's fired off, has had a nice little rally back. Meta is not a name that is designed to stay down too long. Meta is a name that people want. So any discounted opportunity, they're not going to sneeze at getting it, right? You saw that very quickly. Meta was the name that I was screaming. Shout out to all the METU people who took advantage of the 2X lever for Meta, right? So let me also give you those numbers on where I would buy METU again. You should have raised cash on METU. METU would be good in between $20 to $25. So any leverage products, I'm not thinking about buying no leverage product here. That would be stupid, right? Why would you buy a leverage product at an all-time high? Doesn't make sense. You should not be buying a leverage product in an all-time high. You sell leverage products at an all-time high. So this is the time that you should be selling. I don't care what it is, SOXL, AVGX, METU, TSMG. I'm just giving, just going through those names. MSTU, right? You want to be taking your bag off the table. Some people are going to say, well, it didn't get back to the previous high point. And that's exactly my point, because these instruments, they have a huge amount of time decay on them, right? And the expense ratio is very expensive. So just because you didn't get back to those peak points does not mean that you shouldn't take profit. If the equity is back to an all-time high, you should be taking that profit off the board, right? Just bottom line, that's just golden rule. So I'm gonna say it every time because if this market comes down 20%, I don't want no one to come to me and say, "Hey, you told me to buy this, but you didn't tell me to sell it." I'm telling you to sell it every time I get on this Zoom here now. Whether you do it or not, that's on you. But if METU or any of these 2x lever ETFs or 3x lever like a Soxel ends up pulling back on you or T triple Q, that will be on you. So those are my thoughts on those 2x and those 3x lever plays. Please take those off the board. There's no reason to keep holding those at this point in time. It's like, you're playing with a ticking time bomb. And it's a good thing. Once again, it's a great thing when the market's going up, but when the tide switches directions, are you able to stomach that pain? That's the main question you got to ask yourself. Are you able to stomach that pain? Most people, and I would say probably everyone, no matter what your account, you're not going to be able to stomach that specific pain. It's just bottom line, you're not going to be able to stomach that. So you should just do exactly what I tell you to do, and just follow along with that. Because if I was good enough to get you in a position, I got to be good enough to get you out of the position. So you definitely don't want to be caught and get hurt in that. So with the ARK, we covered that $78. So I just want to say this again. To me, the ARK is hitting the targets that we wanted. So at this point with ARK, I would say with the shares, you're good. Continue to hold the shares. But with the individual names that you are in, Hood, Roblox, like it's easy to fall in love with those names and forget what they fundamentally look like. So the first businesses to decline when the market pulls back, what you think is going to be the first businesses? The ARK ETF, because it's filled with the most risky businesses on Wall Street. Now, when the market is in an irrational, exuberant area, and that's exactly what's happening. The market is irrationally exuberant right now, right? And so you should be getting ready to leave these tickers, right? Like SoFi hitting 52-week highs is not telling me to buy. But what I'm trying to train people psychology wise, when the market comes down, that's the time when you buy. When the market's at an all-time high, this is the time that you sell. Now, I'm going to do something over the next 2 to 3 weeks. I'm actually going to cut on CNBC, but it's for a case study perspective, right? And listen to me why. I want to see how many of the tickers that we've been in are being talked about now on CNBC. And I bet it. I haven't cut on CNBC in a while on the television. And I bet they're talking about Palantir every day. I bet they're talking about Uber. I bet they're talking about Roblox. I bet they're talking about these names within the ARK ETF. I'm sure of it. I'm absolutely sure of it. They're talking about these names probably around 11, 12 o'clock every day. So starting tomorrow, I'm going to be cutting CNBC on for the next 3 weeks. And I want to see how many names that I'm holding are being mentioned. The real recipe is when your tickers are in everyone's mouth, that's the time to sell them. When no one's talking about your ticker, that's the best time to buy. Just think about what I said right there. When no one's talking about the ticker, that's usually when it's probably trading sideways. It may be in an accumulation. No one's talking about it. So your ticker is not getting much love. And that's the good thing, because now you're able to what? Accumulate some shares. You're able to pick up and buy over a period of time. You ain't got to try to rush your money in and saying, man, I need to get in this thing before it takes off. And you're trying to FOMO at the mouth. You can just allow the position to actually cook. But what better? I mean, to me, I'm going to use Roblox as an example. Roblox is still a loss-making business. I'm just calling it what it is. I like Roblox, but this is not a business about what you like. This is a business about facts, numbers, and reality. And so the reality is that what's going to be the thing to take Roblox to 120 to 240? Not anytime soon. Could it happen one day? For sure. Anything can happen. Well, we have to start considering when these rapid moves happen in the market, we have to ask ourselves, is the business model able to keep up with these rapid moves? And if the answer to that question is no, this is why I consider this to be a great time to raise cash. Because lo and behold, it'll be August, and the next thing you know, September will come around the door. And if September comes around the door, and let's say the SPY and the QQQ fall 5%, I can always judge how many people are over leveraged by how many responses or text messages. I'm telling you, I wait for those NASDAQ negative 3% days. The question that I'll leave everybody with today is, can you handle a negative 3% NASDAQ day today? If the NASDAQ was to fall 3% right now, could you actually handle that? And if it happened, do you have anything on the side to be able to pick up any of the investments at a discount? So I know there's some questions from people that's going to say, hey, what's the best price to get this? What's the best price, right? All of that good stuff. I'm going to give that to you just like I did last time. The best prices to pick up your favorite tickers. Here right now, if I was somebody that's just walking through the door, there's no discounts. Why am I going to overpay for a product that I know is worth $350, but they're charging me $450 for it? Nah, I'll see that product at $350. I'm not going to force my way in. If the business model doesn't match the price, why am I willing to overpay? I got people asking me, you think it's a good time to buy Palantir? You know what my answer is? Hell no. Why would you try to buy Palantir? When I pull up this chart and I show you where it was last year, why would you be FOMOing at the top? This is how they get people, right? Why would I FOMO at the top? Palantir last July was a $20 company. This July, it's $150. Now I'm going to show you what pain looks like. And some people still haven't gotten over these things. And this is why I say it's always good to learn your lesson early, right? You remember XYZ and your PayPal's and all your good names. Remember, they did the same thing. Eventually, they came here and traded sideways. Now, I'm not saying that Palantir is going to hit a distribution phase anytime soon. What I want to just stress is you're not going to always just see this straight beeline. A lot of times, these straight beelines last 3, 6 months, maybe 9 months. But eventually, things come back to reality. So really, we're trading in fairyland, make-believe land right now. That's really what's happening. We're in make-believe time. You know, we're going to make your dreams come true. And now what's going to happen is I'm going to tell people what's going to happen. I won't say it'll be Palantir, but there will be a few names. CRWV, CoreWeave is one name that I think, like, I'm not touching this name. This name makes me spooked, right? It makes me shiver anytime I see this name. I want this name at $80, $70. We'll see if I'm right in due time, but I'm confident that I can get it there. Some people might be saying, how are you so confident that you'll be able to get the ticker 50% off? Because I've been here a while. I've seen Uber IPO come in hot. The same Uber we talking about right now. I will pull up the chart and show you. I know some people are happy about Coinbase. There's some people that are happy. Some people are just breaking even on Coinbase. And yeah, I said it today. Some people are just breaking even. You might be saying, what you mean breaking even? Yes, there's some people who bought Coinbase day 1, day 2, day 3, day 4, month 1, and are just now breaking even. Let me let you in. Uber comes in, takes off, dumps off, takes off again in 2020, dumps hard. What was the conversation about Uber when it was a $19, $20 stock? Let me tell you, Uber's not profitable. Uber will never be profitable. All these things about Uber this, Uber that. Uber don't pay its drivers enough. All this stuff, which some of the stuff can be true. Nonetheless, Uber is now a profitable business now with a 15 to 16 P to E ratio. Here at $90. Just reality. Profitable business. Right? So it's been able to go through the test to tell the time. So you take a look at Uber here in 2022, the rally over the past 3 years. So what is that telling you? You should go ahead and be buying when people are telling you not to. This is why I said, the CNBC is smoke screens. Look at some people are saying, what do you mean? Yes, Coinbase, the first day it ever opened up, right? Let's go back to this time. First day it ever opened up. You're going to see this long wick. Yeah. Uh, Imagine buying here or buying here. You're just breaking even now or just getting to a little bit of profit, right? But look at how long, this is why I say, look at from 2022, May of 2022, and there's a lot of stocks like this, to October of 2023. There was a lot of stocks that you'll look at that sat in an accumulation phase, ended up now breaking out. And you look at Coinbase, I mean, Coinbase is here, stock is at 407. 407. But for some people, they're just breaking even. It's not always about what's the company you're buying. It's also about when you buy it. So you can have the right company, but be buying at the wrong time. And ladies and gentlemen, I'll leave you here with this today, and we'll reconvene at another time. I'll say that again. You can have the right company, but be buying at the wrong time. And I will say this here now. If you're thinking about FOMOing into a position, this is the wrong time to do so. And the last thing that I would say, if you do not take heed to this information and rewatch this video, you will lose your money. So do not come in here and try to FOMO into positions. It's better to wait for discounts. So no one should be FOMOing into any positions at all-time highs. And last thing I'll say, if you are in options that are profitable, you haven't taken profit, you are in 2x and 3x levered ETFs, and you are up 100, 200%, and you haven't taken your money, it is a ticking time bomb waiting to happen. So August and September, we know what we got to do, and we already starting to look to prepare for it. August and September can be months to set us up for the back half of the year and to kick off 2026 the way we want to. So discipline is important. Not every month is going to look the same. Time to go on defense and smarten up a little bit. So I appreciate y'all. I'll go ahead and wrap this thing up. I know this was the pop-up today, so I'm going to go ahead and log off and get back to work. So I will talk to you guys tomorrow. Peace out.